This is for June 9th, 2013. Just wanted to give you a quick overview of the markets I'm going to be watching for this week and kind of go over a couple of the things I was looking at last week and how things panned out. I hadn't had a chance to post much last week. Next week, this coming week, I should be able to post a little more often. Following week, I'm going to be out of town, but I should be able to post more the following week after that. So, in case you're wondering why I haven't been posting recently, just getting ready for a big trip. Anyways, I want to start off by looking at the daily S&Ps, kind of talk about the action that has happened so far. This 1593 was an area we came close to last Thursday, and that started a good solid 2-day rally. It's kind of hard to tell if this is just short sell covering or this is actually a change of behavior to move prices back up to these highs. It's a little early to tell quite yet. I would guess that we'll probably, at least worst case, have to come down and test this area one more time. We are in an area of some confluence. 1645 and a half is the next area of resistance. As you can tell, the 1632 and 3/4 didn't really cause much slowdown in the rally on Friday. So this is the next area. We could upthrust this area tomorrow. We do have some. David pointed this out in his newsletter. We do have some shortening of the thrust intraday yesterday, and some good signs of weakness. As you can tell, we put in an upthrust here, definitely shortening of the thrust, and we also, if we were to draw a trend channel, we've definitely violated it in the afternoon time. Got one more rally up to the highs and quickly upthrusted and turned down. It was looking a little uglier pre-market tonight, but now it seems to be recovering a little bit. Probably maybe just testing this upthrust. So for me, this is a critical area. We need to start showing some weakness up here, to start coming back down and testing the lows from Thursday. May or may not happen again, don't know. We can't really forecast, but we can anticipate on some scenarios. Scenarios I'll be looking for is definitely a short tomorrow with the shortening of the thrust, violation of the trend channel. Supply is starting to come in here on the 9,000 chart, telling me that there is some selling coming in. If for some reason we bust through this high, yesterday or Friday's high, and hold above it with some ease of movement, I'll definitely look to go long in that area. I'll be cautious though, just in case we start showing some more signs of weakness. I probably won't be swinging for the fences on that one. I think the bigger opportunities on the short side. Even if we are starting the bull market again, we're probably going to at least come back and test those lows we talked about on Friday, as you can see here, Friday's lows. So that's what I'm looking for in the S&Ps. Last time I posted, I did talk about, or I was in a wheat trade, so I want to kind of tell you what I ended up doing with that. As you could tell, the market didn't really strengthen; it actually kind of weakened. Here, I was long on the trade here. Got out on this bar here. I gave it a little room to show me maybe they might have some absorptions on this high, and never really got it. So I did book a little bit of profit. I think I got about $8.50 on it. Sold off hard, came back up. This is the first sign that sellers were starting to take over the market. And when we failed to rally above this high, that was a sign that market was weakening. We really should have taken this high out. Instead, we put in some shortening in the thrust, change of behavior. I didn't take this trade, but this would have been an okay short to take. However, the thing is with wheat right now, it's kind of falling asleep on the daily chart, not really showing me any kind of major technical reasons to go short on the longer term quite yet. We are in an area where we had some accumulation. We could just come down here and test and spring again. So I'm going to step aside, wait till we reach an edge of the market in this one, and then once it does and it shows some strength or weakness or whatnot, I'll consider it again. So it's off my radar screen for now. Also, I mentioned the dollar that last post as well. I had some fundamental reasons for looking to short the dollar and some good technical ones. As you can see, this is the best opportunity. I wasn't watching the market. I didn't catch this trade basically, and had another opportunity. I didn't take it. but as you can tell, it really yielded a good move. So that was definitely a disappointment. I didn't get that, but I have a couple other markets setting up for this week that I'm going to be watching, and I'll show you some of the technical and fundamental reasons for it. As you know, I've mentioned before, I like looking at the commitment and trader report and sentiment for indications for fundamental reasons to short or go long a market. Natural gas, we put in an upthrust last week, and we came up and tested that, and there were some really good trade setups on the tick charts on the natural gas that would have yielded a good trade. I'm still thinking this is a weak market. Major reasons: the commercials are heavily short in an area of resistance. We have ease of downward movement in the background, so this is a great up thrust to take. And my target, of course, would be the bottom of this trading range, which would be around 3.2 or 3.2 or 3.3 area. So there's plenty of room to go. So I'm going to be keeping a close eye on the daily chart, looking for reasons to short that market. Again, open interest was extremely high here, making an all-time high, as you can see, at least on this chart. Last time we had open interest that high was back in, actually it's not even shown on the chart. It goes back at least 2 years. We haven't had open interest that high, which is telling me a lot of the speculators started diving into this market, and you know what? Generally they're wrong. So market upthrusted. Sentiment was very high, which is a good contrarian indicator, and the commercials, which tend to be the smart money, are heavily short at that time, and they're still heavily short. So I still think there's some downside on natural gas. This one here, still a little bit in limbo. It hasn't really given me a solid, hasn't sprung this level yet, but I'm going to keep an eye on it and watch for it this week, see if we can hold above this 139 and 15-30 seconds level. You can see commercials are heavily long, and very bearish sentiment right now, which is a bullish tendency. Also, open interest is very low. It's probably the lowest it's been since, well, it's dipping down here close to where the beginning of the year was in open interest. So that's a sign that the speculators are not interested in being long this market, so they're out. Commercials, on the other hand, are diving in. So keeping an eye on that level for a hold. Obviously, if we break down below here, then technically it's looking weak. Probably come down here and test the 130 level. So be watching T-bonds. Here's a US dollar. I showed you the chart. I was watching it last week. Yielded a great move. As you can see here, sentiment was high. The commercials were heavily short in an area of resistance. As you can see, ease of downward movement here. Very choppy upward move. Still think this has some downside. I'll be keeping an eye on the dollar. Next up is high-grade copper. Copper is kind of a tricky market for me. I don't always have great success in it in the past, but I'm hoping to maybe change my luck with that. Here we're on some support. Technically, it's not really acting wonderfully here. As you can see, we hit some ice, and we have a lot of bearish bars. But from the fundamental side, the commercials are heavily long, and we've got a drop in open interest, as well as sentiment was fairly negative down here. It's bullish here, so right now I'm thinking we're not done testing. We may still test this spring that we put in about a month ago. So I'll be keeping an eye on that market as well. This one doesn't look as strong for as long as I would like to see it. It actually looks still kind of weak. But if we can start shrugging off these bearish bars, I think that's a pretty strong sign that this is just a test that we have here. Still have a lot of clustering of the closes on this down move. Did try to rally, but still holding. It's not exactly going down either. So I'll keep tabs on that for the week. Last market. This looks like probably the strongest market to me. Currencies generally trend very well. So once you set a trend in the currencies, they tend to go for quite a while. And here, as you can see, open interest has had a very large spike down since this sell-off here in this rally. Open interest didn't rise, and it's kept dropping in this test in this spring. And as you can see, we have ease of movement up here. Definitely a lot of area of accumulation, I believe. Here's some climactic, looks like climactic action here. We tested it, rallied, tested it, rallied. Looks like we've tested this area again, and that's a really strong reaction off that spring. So I'm really bullish on the Canadian dollar. Sentiment is very low. Commercials have been buying since what month is that? I can't quite tell. It looks like about a couple months back. They've been buying the market. Open interest down, commercials buying, sentiment low. Right, a good area of technicals. We have an oversold in this trend channel as well. This here looks like, maybe potential change of behavior. It's the first sign of buying. Step back in, pretty large up move. Anyways, so that's what I'm looking at for this week. I'll be watching those markets on the tick chart, maybe more for a swing trade of 2 to 3 days. If the market really takes off for me, I may hold half of my position for more of a swing trade, but a longer term swing trade, a week or two. But anyways, that's what I'm looking for. As far as trading last week, I don't want this video to go super long, so I probably won't go into every day of trading, but I'll show you what I was looking at on Friday. And again, Fridays aren't always my best days for trading, but to me, I was definitely bullish when we broke above yesterday's highs. I did go for a short in this area, thinking maybe we might come down lower. When we didn't, when we held, I exited my short. I considered turning and reversing long because there's a 310 oscillator buy on the 9,000 chart, but I wasn't quick enough to do that. Missed that. Did try going long in here, and of course didn't really yield much for me. So I missed the best move of the trade was in the morning. Really, there was no real strong signs of weakness yet. So I mean, we didn't really have much shortening of the thrust here quite yet. I mean, it looked more like a absorption, especially when we came back up into this area. But that's what I did on Friday. Thursday, I did catch an okay long when I was looking at that support level on the daily chart, which we talked about. I think it was 1593 and 3/4, I believe. We got down to 1596, and when we started going back above yesterday's low, right in here was where I took my first long, captured a little bit of the move, got long in here, captured a little bit more of the move. Didn't capture nearly as much as I probably should have, given the fact that we rejected the previous day's lows. It was a good reason that we'd at least go up and test major resistance, which I think was up in this area. But anyways, that's it for tonight, and I'll try to give more updates this week, especially on my swing trades. Maybe I'll try posting some of these charts I've listed just so you guys can take a look at them. Anyways, that's it for today, and we'll talk to you guys again tomorrow.